Welcome, traders. In this video, we're going to go over two trades taken today on June 2nd. And the first one was a short trade that was good for 6 points. And the second was a long trade good for 11 points. Now, both trades were obviously very successful and very profitable, as you can see from the chart. But what I really want to highlight here is how I used the ratio indicator and to really highlight how I used information from StopGamma. In a prior video, I mentioned StopGamma, and as a refresher, basically what they do is they use the open interest in the options to develop levels where we should see support and resistance. And this is a service now that I've been using for the last 2 or 3 weeks, and it is just tremendously helpful for me, especially today in these trades. The cost is very inexpensive, $26 for just the email, or if you have the BookMap program, that costs $36 a month to import those levels into BookMap. Full disclosure, I don't receive anything from either BookMap or StopGamma. So let's take a look at what I did to take these trades. So in looking at the KP2 ratio, what we see in the first trade is that the ratio, previously the market had made a strong trend high and the price was selling off. And basically, I'm using the same idea of this ratio of what is a losing trade to enter into this short trade. So as we talked about before, if we see a strong trend, but we see that the ratio indicator is going sideways, that is a bad thing. And what we expect is we expect to see this to continue to sell off. So it really wasn't until this portion right here that we saw the ratio indicator indicating that we were now putting in a bottom. So I took 2 opportunities to short up here at about 62.50. And I took them off at 57. And the reason I took them off at 57 is because of the beginning of this zone right here. Now, I really did have a better target down here at 55, and I'm going to get to that. But I wanted to clear this trade and not be instantly reversing without being able to analyze down here at 55. So for 5 micro contracts, for about 6 points, I was very happy with that trade. Now, as I said, the ratio indicator here was basically now responding as I expected, and there was even a more tremendous buy signal right here at the low. We came down, we tested the low, we had both divergence, accumulation, and we had the ratio doubling from 96 to 207. That signal alone is one of the best signals that I've just frankly ever seen. So this was just a tremendous trading opportunity here. Unfortunately, I had made my initial buys here, and my attention was diverted as price was coming down back here. So I wasn't able to add to it. And if we were going to add to it, this really was the confirmation of the low being put in right here. This is just a tremendous signal. Everything we want to see. Okay, so why do we want to see that? So just as a quick review, as price is coming down, what we are seeing is limit orders coming in to buy up as much as possible. So we are taking the ratio and they just want to add to that to their position that they have already. And then what is happening is once prices come down, tested this low, the V occurs when the buying switches from limit orders to market orders. So that's really the key here. That's why we see this V. Here they're accumulating on limit orders, and at the point where the buy program kicks off, they are switching from accumulating on limit orders to buying on market orders, and up we go. Now, I added to the trade right here. So let's take a look at why I did that. So what we have here is a strong trend reversal pattern. And in a strong trend reversal, we go from a blue support zone to the opposite blue resistance zone. In this case, we traded even higher, which to me is a sign of additional strength. And then what you see here is you see all of these individual orders. Now, this is the Delta Strength Indicator, which is picking up individual large market orders. And what's happening? Well, you see all this selling going on right here, but the buyers are willing to absorb all of this on limit orders. Well, that's exactly the reason why this indicator right here, the KP2 ratio, is going sideways, because the limit order support is matching the market orders trying to drive this down. So that to me is an additional sign of strength. So this here is the actual number for the KP2. So the KP2 is the delta from the low to the high. In this case, it was 3,642. So we could see that the delta was slightly increasing as this was going higher. Then as we got our retracement right here, we can see that we had very good numbers, and I made my buy here at 59.75, and I was prepared to buy more if we traded lower. I then exited the trade here at 65.25. And what I think is important to understand is that in this case, I used the KP2 ratio against itself. In other words, usually when I'm telling you that we have a high KP2 ratio, what I'm saying is that this is a distribution, unless the ratio is going sideways as it was doing here. So by it going sideways as it was doing here and in the pre-market, that gave me the confidence in both of those trades, that my trade here was going to end up trading higher and my trade in the pre-market was going to trade lower. There's one other thing that I am now doing that tremendously helped in this idea, and the idea would have added even more confidence to the trade. Now, what we want to see is we want to see the signal for ZTP order flow at either a bottom or a top as we have up here. And it's really important because the ZTP order flow, we want to see this when we're either making new highs as we did up here or making new lows as we did down here. I'm not all that concerned about the exhaustion signal that we're getting here, but the other signal that I would consider to be extremely important would be the POC extension or POC absorption signal that we could get at either one of these highs or lows also. But either one of these, as we could see, we marked the low, we marked the high, and it's not going to be a coincidence that price traded to 30.70, and I'm going to explain why shortly. Now, what I have done down here is I have the cumulative delta set up, and I've been doing a little research, and one of the things that I like to see is I like to see the cumulative delta. So I basically gone and created 4 cumulative delta lines. The solid blue line is every contract, so that is just telling me what the cumulative delta is. Now, one of the advantages to ZoneTraderPro is that we are able to reconstruct the orders. So I can reconstruct the orders, and I can account for orders of any size. So my red filter here is set for between 1 and 10 with tape reconstruction. The green, which is who I'm really interested in following, are the traders between 31 and 99. And again, we're hitting reconstruct tape. It's also important that you change the reset time to 1800 on all of these. And that kind of helps out later in the day to understand what the overall cumulative delta is. And then the last setting that I have is the one in black, which represents traders from 100 to 2,000 contracts. But the one that's most interesting to me, based upon a little research I did, is 31 to 99. And what I would suggest you do is play with these and put these on your regular chart, especially the 31 to 99, and see if you see and understand what I am seeing also. Basically, what I'm seeing is that the 31 to 99 is somewhat of a leading indicator here. So as you can see, as price is making its high here, well, the 31 to 99 was actually selling off. And then what happens? Our delta strength is dark blue in both of these two bars right here. Dark blue means that we have higher than average volume between 140 and 175%. What black means is that we have extremely high volume of over 175% of normal. So this is what we want to see when we have a market reversal. Okay, so what we're looking at now is BookMap and the picture that I saw in the morning to execute my 2 trades. What is very important is this Cloud Notes column right here, and this is the Cloud Notes column from StopGamma. So as I just mentioned, I said 3070 was an important number. And as you can see, there is coincidentally resting liquidity here at 3070. And you'll see down here at 3055, they have the volume trigger, and they have open interest for volumes at 3050. So that makes the area from 3050 to 3055 an extremely important area for support. And if that is broken, then we could see some significant volatility. If it's not broken, then we should see prices going higher. So the other thing that I would note from this chart, and what I took into account for, is this resting liquidity here at 3055. Now, I initiated my trade for another reason, and that is the Iceberg detector that you see down here in pink. Red is the stop, and pink is the Iceberg detector. An Iceberg is a hidden order, and BookMap has come out with this in just the past couple months. You have to pay an additional fee for it. BookMap is a program that I started using over 4 years ago, before I had my divergence and order flow tools, and I own the lifetime license to it. So for me, it is valuable information that I have because I have lifetime license. So as we see, as price is trading up here at around my entry, we see that what we have is we see that the iceberg orders are somewhere in the neighborhood of a negative 266. And they were letting out more iceberg orders. And what's important to remember here is that these iceberg orders, these are the orders that people want to remain hidden from the market, and they actually have to pay an extra fee for, according to BookMap. So I reshorted here. Price had come down to about 57, so pretty close to my target, but then it had bounced back up to about 59. And you can see as that happened, we got this selling of iceberg orders, which basically took it from neutral down to a negative 500. So somebody wanted to let out 500 iceberg orders in a real big hurry in just a few seconds. So I saw that as an opportunity to add, and I added 3 contracts here to that trade. And again, I took it off here at 57, where there had been the first sign of liquidity. Now, again, I did this for my reasons, which are I don't want to go and have to reevaluate this in real time and hit the reverse button. So I was happy with the 6 points and the 5 contracts. So I put out a standing limit order here at the volume trigger of 55. And as price traded lower down here to 52, I then added to the trade. Now, here's why I really regret not adding to that trade on that second test down into 52. Look what happens with the Iceberg Indicator. It goes from a negative 200 in about 2 minutes. It's at a 700, and at that test of the low, it's now over 3,200. So that, and you can see how as price came back down to test 3050, the dark red area that is developing is showing that they want to provide even more support and defend the price of 3050. And without this information from StopGamma, combined with the information from the Iceberg Indicator, that led me to put a whole lot of confidence in this trade. Now, if you also want to understand what I was seeing when I exited, again, the iceberg detector was very high, still at about a 3600, and you saw it spike here to over 4,000 as I was exiting the trade, and these stops here were being run. And that was fine. What I wanted to do is book my profit. And I wanted to book my profit before we got up here to 3070. And as we see, as price traded higher to 3070, which should be a resistance zone, what is happening with the Iceberg Indicator? They're selling icebergs not fairly hard, not as hard as they bought them, but they were selling them into that high. So in looking at today's trades performance, there are a total of 5 trades that I made, and those 5 trades resulted in a total of 94 ES points for a total of $470 on the micros. So I want to go ahead and thank you for watching, and I really want to say thank you to StopGamma for providing some excellent information. And in case you were wondering, after the market had hit that high here at 3070, we traded all the way back down to that volatility level identified StopGamma and are now bouncing. And what do we again see at the lows? We again see a ZTP order flow buy, and we see a second ZTP order flow buy on a lower low. again, the delta strength right here is telling us this is the point where we are really seeing strength coming into the market with the buyers coming to meet the sellers. And I'd also illustrate two other things here. Directly before this bar, we have a brown delta strength marker. And the brown, as indicated down here, means low volume. So what is happening here is price is falling on low volume. In other words, they're not providing limit order support, and they're just allowing price to fall in order to get better prices down here. So that's the reason that we see this brown here, and why we see what we're seeing at the lows back here at 30.50. So a little bit of education out of the way. Hope you've enjoyed this video. Let me know if you have any questions. Take care, stay safe, and have a good day.